Is Donald Trump crashing the stock market? Should you move to the sidelines, or does this present a great opportunity to buy the dip? We'll discuss that on today's show. In fact, we'll get to that right away. We'll discuss what age groups and what type of investors should probably move to the sidelines, and which of you should take these dips that we are seeing across all of the major FAANG stocks as a great buying opportunity. We'll go through them all technically as well, show you on the charts where we're starting to pull back, where the buying opportunities present themselves. We've got a lot of news to get to, as well as most of these stocks made a lot of news this week. What is going on, investors? Hopefully you guys are doing well out there. We had a major dip in most of the FAANG stocks. I am recording this about 20 minutes before the market close, so these prices may jump around as we move through things. Let's kick things off like we always do with Meta Platforms. Start of the week at 671, down over 7%. You'll want to stick around and watch Meta. Technically, it is pulling into an area where you are going to ring the cash register, so to speak, down to about $622 per share. Now, the question that a lot of investors are wondering, they're watching CNBC, they're reading Twitter, they're reading X, they're reading, all different types of opinions on the stock market. On Monday, I sent out a newsletter, and very concisely, and not a very long newsletter, said, hey, look, if I was 65 years old or older and I was on fixed income and I had just a modest nest egg, which is the vast majority of people when they reach the age of 65, I said, hey, look, I'd move to the sidelines and wait for the dust to settle on this tariff stuff. What we have to remember about Trump is he's like a tornado, and that tornado rips through the stock market every once in a while. And if I was an older investor, and if I had, I can't watch my $100,000, $1 million, $2 million portfolio. I can't watch it peel off 20% in a week. And that's basically what we've seen. You've seen many major market stocks peel off 10, 15, 20% in a 2-week period of time. If you're 65 years old, you're on fixed income, you've got your nest egg, you can't handle that. You've got to step out of the way of that. Wouldn't blame anybody for having that type of attitude. Now, everybody else, everybody under the age of probably about 50 can certainly tactically take advantage of the volatility that these events create. Again, Trump is like a tornado. He is going to run through town with his tornado, and in a week or two, he'll be off doing something else, and the media and the attention will be on something else because, again, the attention spans are very, very short. And the reasons why we continue to focus on these markets is because the consumers that are driving the tech spending are not you and I. They're not 65-year-olds on fixed income. They're not making minimum wage working at Chipotle or McDonald's. These are hyperscalers with tens of billions, hundreds of billions of dollars. And when we get to Google, they have the pressure on the entire organization. We have founders that could be chilling on yachts, telling employees to come back to the office and work 60 hours a week because they know what is at stake here. Hundreds of billions, trillions of dollars is at stake. And that is why they're going to spend 34% more CapEx in 2025. And I think that it'll likely be a light estimate as we move through this year. These companies are only going to feel more and more pressure. Now, speaking of pressure, Apple shares not under as much pressure as the other FAANG stocks that we'll cover. Started the week at 242, drifted lower by about 2% to finish the week at about 238. But the company is feeling the pressure from an AI standpoint, and they're more personalized and upgraded version of Siri, which they showed off at the Worldwide Developer Conference last year, that is being delayed. It was expected towards the tail end of last year. Now it is being delayed until 2026. I dug around. There are some speculations that some of this is actually compute related by the fact that Apple, they do have some of the technology, but they don't actually have a lot of the compute required in order to run an advanced version of Siri, not only just on the phones, but in a cloud environment. They could be one of the other customers that Broadcom announced on their conference call yesterday. Apple having to beef things up from a server perspective in order to deliver these high-end voice products. we'll see what happens there. Now, the company is planning to potentially launch its first foldable iPhone by 2026. This is one of the problems in the hardware space, particularly as it relates to Apple, is they've got to lock these design in sometime this year, but you really won't see this until next year. They think this phone could cost over $2,000. Now, here in America, this thing would probably be relatively popular, but we'll talk about the Chinese market, which Apple continues to see slowing growth there. And they announced that iPhone 16e, which is a quote, cheaper version, smaller version of the phone. Many analysts, including myself, believe that that will likely be underwhelming in the Chinese market. Part of that has to do with the fact I was researching Qualcomm, and they were talking about these subsidies that the Chinese government has in place for buying things like smartphones. And so if the government is giving you money to buy a smartphone, I think the smart thing for Apple to do is actually to come out with a much more expensive phone, because when the government is subsidizing things, natural consumer behavior is maybe not go for the cheap version because you're getting basically a coupon. You might as well buy the more higher end phone. And so this 16e in a subsidized market, probably not going to do as well. What is doing well for the company is the App Store and the fact that you have a software phase starting to unroll. And we'll talk about this when we get to Nvidia. A lot of the software stocks are starting to see their revenue start to pick up as AI becomes a bigger part of their business. Obviously, more applications get released. Those have pricing mechanisms where Apple takes a cut of those sales. Company was big on the product announcements, announcing a new iPad Air this week with an M3 chip, which is their proprietary computer chip inside of there. This is basically like something that powers a high-performance laptop in one of these smaller iPad Airs. These start at about $600. The company also announced a new Mac Studio, which is their high-end computer really meant for designers or coders, people doing really kind of advanced work on side of a computer. Those start at about $2,000, but go up dramatically up there depending on how you package those things. More popular product will be this MacBook Air, which is actually $100 cheaper than the version last year, and it got an upgraded chip. These start at about $1,000 if you're looking for a very nice lightweight laptop. I might get one at some point because I travel around with a big MacBook Pro. Darn thing's pretty heavy. This is actually really, really intriguing. Now, the company is challenging a United Kingdom ruling that basically allows the government to, quote, backdoor into your encrypted, I think, photos and data. I mean, it's just unbelievable from an American's perspective, although not that the United States government hasn't done stuff like this and is guilty of this. Apple trying to push back a little bit. Moving on to Amazon, start of the week at 211. This one dipped as low as 193, got a little bit of it back, but still down about 6% on Amazon. The company strengthening its live sport offering with All Elite Wrestling pay-per-view. Not super familiar with the wrestling world. Obviously, Netflix has an agreement with the E, and you've got All Elite Wrestling, which is, I would assume, like maybe a less popular version of wrestling, but the fans of these types of things tend to be relatively loyal. Now, the AWS division of Amazon is reportedly focusing on new agentic AI. This will be the buzzword for the Salesforce, the ServiceNow, these big software providers. They're rolling out what they're calling agentic artificial intelligence. It's basically software that automates more of different types of tasks. If it's like a Salesforce, it might be automating some of the lead flow or the input or different types of social media interaction, customer service interactions, chatbots, those types of things. Amazon reportedly getting into that as well. The company is also planning to build a new reasoning AI model, as all of these companies basically getting into that business. Amazon does rely a little bit on Anthropic, as that company reached a $61.5 billion valuation. Be interesting to see if any of these companies, OpenAI, I don't know, Anthropic, we have CoreWeave, we'll get to that when we get to Nvidia. We'll see if any of these companies go public later this year. Obviously, with the market the way it's been over the past 2 weeks, probably wouldn't be super excited about going public, at least in this current environment. But if you get a rebound in things, it'll be interesting to see if one of them does take the leap. Moving on to Netflix. Start of the week week at 988, down 10%, 10%. Finished the week under $887 per share. Not a lot of news out of Netflix. Moving on to Nvidia. Start the week at 120. This one down 7%, down to $112 per share, well underneath the 52-week high of $153. In fact, the company has lost $1 trillion of its market cap since hitting record highs earlier this year, which is shocking just going into the Blackwell ramp up. They only sold $11 billion, I think, of off of 40 some odd billion dollars worth of revenue in the previous quarter. So as that ramps up later this year, we'll see what happens with Nvidia. But it follows the pattern that I've been stressing for many years now, actually, is that the AI race is rolling out in a very similar pattern as it relates to technology. You have hardware, which is Nvidia in this case. You have software, and then eventually you look everywhere and your grandma's chatting with Grok or one of these AI agents. We're not quite at the AI everywhere phase, but we're certainly moving into a software phase. If you're looking at some of these software companies, I know the revenue growth over at Salesforce left some to be desired, but I think you could read between the lines there and say, hey, things will probably be relatively good from an AI perspective. You look at a ServiceNow, you look at Palantir, which has explosive growth coming from different types of software projects, among other companies as well. You're starting to see a little bit of the explosion because the compute is there. And then on the startup side, the Anthropics, the XAIs, the OpenAIs, they've seen their valuations just like 10x, 100x, really over the past couple of years. And so that's another example of the software phase. Now, Project Stargate, which was that project announced by OpenAI, Masa-san, and Oracle, said they're going to need 64,000 of NVIDIA's latest GB200 GPUs by the end of next year. 64,000 seems a little light considering some of the other projects that have launched with H100s. We'll see if NVIDIA is able to deliver that. Intel rose earlier this week on reports that NVIDIA and potentially Broadcom might be testing chip manufacturing using their foundry. Intel has lacked a marquee flagship customer other than themselves to use their foundry. If Nvidia or Broadcom potentially come on board, that'll be interesting. You obviously had TSM announce earlier this week, I believe it was, a large investment, another large investment in the United States. So those two companies definitely will be battling it out. Now you have CoreWeave potentially going public, I think as early as maybe even next week. They're buying an AI developer platform. The company saw its revenue skyrocket over the last year, although they still remain unprofitable. Let me know down in the comments if you want me to cover more of CoreWeave, and that's an interesting story. Moving on to Google. Start of the week at 171. These shares bounced back over a point and a half, finished the week close to $174. The Google's co-founder, Sergey Brin, is urging staff to turbocharge their efforts, and he's saying, get off your couch. Stop being lazy. You need to be working 60 hours per week. You need to be coming into the office at least 5 days a week. He is trying to light a fire under the Google employees, and we'll see if it works. The company Waymo division launched its autonomous vehicles in the great city of Austin, Texas. They have partnered with Uber here. There's a lot of Uber bulls, and we'll see how this works out. I could be wrong about this, but I think what Waymo is doing here is a little bit of a strategy that we've seen in the past with like an Amazon, and there's probably some other examples out there. Amazon invites people onto their platform to sell stuff. And then what does Amazon do? A year or two later, they come out with a product that is cheaper and better. And so Waymo already has its own autonomous vehicle app inside of the city of San Francisco, also in Los Angeles. If you ever visit San Francisco, you see the Waymos everywhere. In fact, it's probably got a bigger market share than Lyft does, at least in that city. And they're certainly capping the growth rate of Uber. Now, they've partnered with Uber, I believe in Austin, and I think Miami and maybe another market as well, to roll those out. So if you're on the Uber app, you actually can request the Waymo. I don't think this is the strategy for Waymo going forward. I don't think partnering with somebody else and giving them market share, giving them your data, giving them a portion of the profits is something that the company will do in the long run. I think this is more a savvy move by Waymo to actually get a window inside of Uber's business, figure out some of the things that they need to do well, because they basically will be getting data from Uber from this arrangement. And then when they decide to launch their own apps inside of these other markets, they'll be that much more prepared. Google is urging the Department of Justice to avoid breaking up the company. That trial moves forward this week, and we'll see what happens. You're kind of in the remedy stage. You're not quite towards a resolution here, but that is marching down towards the summertime, where, again, under the previous administration, they have ruled that Google is essentially a monopoly, and one or some of the recommendations is actually breaking the company up, forcing them to sell popular products like the Chrome browser. Now, YouTube Premium Lite is being tested here in the United States for $7.99 per month. That is in contrast to the current $13.99 plan. I don't know why the company is moving down the pricing spectrum. $13.99 seems incredibly cheap based on what you get here. And also the $7.99 plan basically gives you everything other than background play, downloads, and music and videos ad-free. Seems to me the $7.99 is a pretty good deal. In fact, I would suspect there's some people on the $13.99 plan which would actually downgrade to $7.99, but obviously Google probably knows what they're doing. Big news of the week is that Google is testing its AI-only mode for some search engine queries. This is probably on the backs of Sergey Brin basically telling the employees, start working harder and start shipping products. It wasn't just work harder. It was like, hey, start shipping these products. Stop making them full of filters and all this other stuff. Just get it out there and go. And this AI mode basically takes away all the traditional search engine kind of blue links that we used to click on back in the day. And it's all AI overviews. And so obviously this won't apply to all searches. And I think even going forward, it's certainly if we start to look out 3, 4, 5 years from now, I think AI will be a bigger portion of what you get from a search engine environment. But I think there'll always be a little bit of that kind of a treasure hunt, if you will, as it relates to that. But look, if you rely on search engine ads, SEO has been dead, I think, for several years now, but that is basically going to be completely RIP here very soon. And it'll be interesting to see how the company monetizes its AI only mode. One thing is for sure about Google is they figure out a way to monetize, and that's probably their best competitive advantage, other than the fact that they have billions and billions of users around the world across a wide range of products. The company has also done a very nice job figuring out how to layer in the ads to the product, and I would expect Google to do that again. Moving to Microsoft, started the week at $394. This one basically roughly flat. You'll see that technically as well. OpenAI said that they could sell $20,000 a month agents, which is like $240,000 a year. If I'm running a business, I'm listening to a lot of these startup founders, and they've been talking about how they're using AI to not necessarily replace current employees, but what a lot of people are talking about is, hey, I didn't have to go out and hire somebody new because of AI agents. I don't think a $20,000 a month agent is really that attractive in this marketplace. I think it's easy for the company to say this, just like it'd be easy for me to say, hey, if I lived in Los Angeles, I would be a movie star. Or if I was 6'5", I would be in the NBA. I think that's kind of what OpenAI is doing here, but I don't think a $20,000 a month agent, this is not going to be a popular product. There's not going to be a lot of people interested in this. And also, to steal a line from Jeff Bezos, your margin is my opportunity. And I think that's what other AI companies would do. If they're charging $20,000 a month for agents, well, XAI or Anthropic or Salesforce or any of these other companies, what if they launched one that basically did the same thing for $5,000? And so this is just a bunch of nonsense, I think, from OpenAI. Now, Elon Musk's bid to block OpenAI's for-profit transition is rejected, and it looks like the company is going to be able to move forward with that. Speaking of moving forward, Tesla moving in reverse this week. Started the week at $297, down 1%, finished the week close to 261. You'll see that technically as well. The company is building, though, their third mega factory in a facility near Houston. Mega factories make the batteries, and what we're seeing with the battery technology, first of all, it's the fastest growing business inside of Tesla. It's potentially next quarter, it might actually be the most profitable business inside of Tesla, because the auto business, as you'll see here, is in absolute shambles over at Tesla. And the margins are just compressing and compressing. They're offering no interest. They're offering free supercharging. I mean, they're basically trying to give Teslas away right now. They're texting me all the time, trying to get in the trade in the ones that I have to go get a new one. They're having trouble moving these things. So I think next quarter, these mega factories could actually be the biggest portion of this business. That's exciting because these do have kind of an AI data center play. These mega packs allow data centers to maybe more efficiently control power and deliver it when it's needed, store it when it's not. And so this is something that probably has a multi-year tailwind behind it, and not a ton of competition either. Now, company wants zero tariffs, so the US wants zero tariffs on car imports into India. Right now, there is 100 or as high as 110% tariff for cars going into the country of India. So if you manufacture the car outside of India and you try to import it in, it has 110% tariff there. So my guess is the only stuff that is moving inside of India are probably mega supercars, the mega wealthy people inside of India that have no price sensitivity. They're like, who cares if the Ferrari is twice as expensive, because they don't care. And so, but it obviously impacts companies like Tesla, like Ford, anybody else that's trying to import there. So this is something to really monitor. I know the tariffs discussions are back and forth. Donald Trump's kind of back and forth and kind of flip-flopping on these type of things. But this is one potential positive. If you could reduce the tariffs, either reduce them or have them go away considerably or at all, then that could be a step in the right direction. Certainly could benefit most car makers, including Tesla. Now, in Germany, though, sales plummeted, even as the overall EV market in the country continues to grow. Now, there is maybe some nuance here. Tesla's best-selling model is the Model Y, and they've just released, or they're starting to roll out, I think even today, a brand new model that is a little bit of a refresh. It's not quite a refresh. I would say this is almost a redesign. Now, to the non-discerning eye, two Teslas side by side look relatively the same. But if you're in the market for this car, if I was in the market for a new Model Y and I did just even 10, 15 minutes of market research before I purchased the car, I would see that Tesla was about to release a new model, and I would probably wait. Very similar to like an iPhone. If I was late summer, early fall, I wanted a new iPhone, I would probably say, well, the new one's about to come out, so I might as well wait a couple of weeks. I think that may be contributing to some of the drops in sales, certainly not all of that. Some people believe, obviously, there's a backlash against Elon Musk based on his political stance and those types of things. Certainly possible. China-made EVs also dropped tremendously in February, down 49%. This is while other Chinese domestic makers, including NIO, XPeng, and others, had their sales dramatically increase. And so this is really not good for Tesla. They've had these moments in China before where sales dip and then they're able to rebound. We'll see if they're able to do that. One way that they're trying to do that is offering an insurance subsidy in China worth over $1,000. They're certainly doing that here in the United States. I noticed the APR on some of the cars has dropped down to 0, and they continue to drop the price. Anytime you see Tesla dropping the price, adding incentives, they have real-time data in terms of how, and they've talked about this on the conference call. This is not me making this up. They've talked about on the conference call every single day, executives at Tesla know exactly how many cars were made, exactly how many were sold because of their integrated model. They're not relying on dealers to move these things. And so they adjust the price based on that. And so when they're dropping the price, it's telling you the demand has also dropped. We'll see if these subsidies and all this stuff can turn things around over at Tesla. Moving over to the technical segment of the show. I had these zoomed out because, guys, can you see the dip that we've had the past 2 weeks on this chart? No. Now, I know some of you are younger investors, but if you're like me, you were around during the dot-com crash. You were around during the 2008, 2009 crash. In fact, this was the time where I put most money ever into the stock market, was actually during this crash. And I remember I was putting my money into the market all the way down, all the way down, all the way down. And I kept watching my account go lower and lower and lower and lower. And then several years later, I sold my entire portfolio and bought the house that I'm sitting in today. You will never look back and remember if you got in right at the right time or if you got in at the wrong time. The key is to have a plan and to execute on that plan. We are dipping back on the S&P 500, but it's really nothing to be overly concerned about. We had just made new all-time highs basically 2 or 3 weeks ago. I'm on a weekly chart here. So yeah, 2 or 3 weeks ago, you made all-time highs on the S&P 500. You're pulling back, further pullbacks should be bought. You should pick these levels out as we're watching a show like this. Meta pulled back to the middle of the channel. I don't move these lines around too much. You're right at the middle of the channel. On Meta, this is an area where if you wanted 10 shares, this is where you buy one. And look, you have to make these decisions now, because 95% of you watching this are going to watch these stocks continue to move lower, and you'll make every excuse why you shouldn't buy, you shouldn't buy, you shouldn't buy. And then eventually, again, the Trump tornado will move through the market. He'll move on to the border. He'll move on to Ukraine. He'll move on to NATO. He'll move on to whatever else he decides to move on to. The market will rebound and move higher. So you have to pick these levels in advance and just understand, just like when I bought stocks in 2008, I didn't get in the bottom, but when I got the keys to my house, I didn't regret any of that ever. Apple holding up very nicely. Maybe this company is in there buying the stock, but you're holding a tight range on Apple. I don't think you've got a great buying opportunity there yet. Amazon, big candle. You can actually kind of see it. There's obviously been much bigger dips in the company's history, but you can actually see the move that Amazon made just over the past couple of weeks since the highs down to current price, down 17% at its lows, a full-on correction, down 20% with Amazon. That is an automatic buy for me. Netflix, big red candle. In fact, we haven't seen a red candle like that in a while with Netflix. You're close to the bottom of the channel. If you like Netflix, creates a buying opportunity. Nvidia is desperately trying to hold this area right here. This is support with Nvidia, like right where the stock is, 110, 106. You've seen how like you've kind of pierced through this area and rebound. There is some like hanging support down here at 80, 90 bucks. If you break through that, you're coming down to 43 bucks on this one, which would be like I'm selling everything and backing up the truck at that moment. Google pulling into a nice area. It's not a smoking hot buy. This is why these charts just give you such great perspective. I mean, I'm seeing everybody just freak out and panic, and these charts are just telling you like, hey, we've had a pullback. But this is, first of all, I mean, you zoom this out on a longer time frame, you can barely see it. But even on a shorter time zoomed in view, you're pulling back. But just again, based on the plan that I've already had in place with these charts, this is not like a once in a lifetime buying opportunity. These are areas where you do step in and you buy, but it's nothing. This is nothing to be overly concerned about. Microsoft has pulled back to a near decade, or actually a decade-long trend. This purple line has been intact for a decade. Here we are touching it. You've touched it, 3 or 4 times over the past 10 years. Every single time it is a buy. Can you be wrong here? This is the disease on Wall Street. Everybody is so concerned about being wrong. And the beauty is you, the individual investor watching this, you don't have the pressure like me where I can come on here and say, I can buy this. And then if it goes down 15%, my God, my comments, my inbox, it blows up with people saying, you were wrong. I did this and I blame you, blah, blah, blah. I mean, I've heard it all. This channel turned 9 years old this week. Trust me, I've heard it all. And so you could be wrong here and the stock could go lower, but a big boy puts his big boy pants on and says, well, if I bought a little bit here at 390 and it pulls down to 320, which would be the next area of support, you just add on a little bit more. If you don't have any more money to add to this market, you need more skills, you need more income, you need more money. And so solve that before you really solve anything else. Tesla pulled down to a beautiful buying opportunity down here. If you like the speculative nature of Tesla, this one's off dramatically from the highs that you made back in December. You're down 46% on this one in basically a month and a half. What's interesting is this stock is basically consolidated sideways for a long time now. So if you snap on this fixed range volume profile, anytime you've got this sideways consolidation, I snap this on and look where the consolidation is. Now, can Tesla break below this? Absolutely. The stock tends to swing higher than normal. I mean, it's a higher beta stock, higher volatility, and it tends to move lower. But this is the area, notice to the dollar, where the stock bounced off. So these indicate these can be an act of confidence for you when the market's going crazy, Twitter's going crazy. If you hate Donald Trump, your mind is just kind of completely messed up. I saw the same thing with people that didn't like President Biden. Their mind would just be totally confused. Put that all to the side and just rely on the charts. Here's where it's showing you that there's demand for shares all the way down to about $160. There should be demand for Tesla stock. So these are areas where you can accumulate. Folks, that was the FAANG Stock recap show for Friday, March 7th. Hopefully you guys enjoyed today's video. Be sure to subscribe to the newsletter. I've got a twice a week newsletter, once on Monday, once on Friday, kind of setting the stage and then recapping that. We should launch the paid service here very soon. I thought it was going to be this week. Got a meeting after this. This is why I had to start the show a little bit sooner. So that should come out relatively soon. That'll be for 1% investors. So definitely not something for everybody, at least on the initial launch. We're looking for 1% investors that are looking to change their life from a financial perspective, because that's basically what has happened to me. I was dead broke 15 years ago. I say, hey, what does rich people do? What do the best investors, what do the people with the most money do? Well, they tend to focus on the stock market. So I quit my fantasy teams. I quit goofing around. I quit basically doing everything, and I focused on the stock market, and my life has changed financially ever since then. And it certainly can change your life. It can change your family's life. It can change your kid's life. It can change everything. So those are the people that we're looking for on the paid service. That'll come very, very soon. I feel a little bit like Elon Musk promising these things, and then, months go by, but we are relatively on track and we'll get there soon. Hopefully you guys enjoyed today's video. We'll be back again soon with more. Good luck with your investments.